This is our Forex blog for August 14th, 2013, and I'd like to showcase some of what I consider to be the easiest ways of trading. I can scroll this back and they all line up. This is one of the features that allows you to simulate trading with our software. But basically, in a nutshell, you can see each individual currency as a chart, and that allows you to see a wealth of information you can't from our older currency meter type tools. For instance, you can see the euro started today off over yesterday's euro dollar high, and then it made a higher high, pulled back to the hourly moving average, and failed to go back up to the highs. And you can clearly see that on the chart. It's very easy to see and it's unmistakable. And so once it breaks down underneath the hourly, and especially underneath the point of control, this is where most traders have positions from the previous day in all the euro dollar pairs. It tends to be a good place to sell it, and you want to sell it against whatever currency is strongest at the time. It's that simple. You buy the strong versus the weak, and you sell the weak versus the strong. So there's every sign on here showed that the euro dollar was failing to go up. It made a slightly lower high here, then broke down, and it's likely to crash. You can see of the four currencies, the pound is the strongest one. It actually went above the upper containment band by a significant amount. Most currencies at the upper containment bands do reverse. However, it is also a sign of strength. You can see this one went above here, pulled back a little bit, went up, pulled back, went up, pulled back. Usually that's what happens near the upper band, or at least it happens often enough that you can profit off of it. So the euro is very likely to go down. The pound, very strong trend. In fact, it made a higher high here than the previous swing. You got a nice little pullback right here. Ideally, it would pull back a little bit more, but this is a decent place to be selling the euro pound. And that's a little bit after 5 o'clock. Or actually, yeah, a little bit after 5 o'clock. So you can see on the chart, the euro pound had made a huge move down. Partly one of the reasons the pound had gone up against almost every currency. You have that nice little pullback right here. You go short with your stop right above here, and you can see it fell from around 85.70 all the way down to about 28. Huge move. Now, obviously, you probably would have shorted here, got out somewhere here, shorted again right here. I would have probably got out somewhere during this chop. The farther it goes, the less likely it is for bigger profits. But basically, that's it in a nutshell. And a lot of times currencies will go up, they'll make a two-wave pullback. Buying the second wave is a much higher probability. So let's take a look at this one here. And also drawing the Fibonacci's on the currency indexes works as well as trend line breaks. You can see this is a perfect 50% retracement. The euro is very weak, however it's at the lower bands, likely to move back up. So I wouldn't, even though it may continue on down, it's a better bet to buy the pound versus a currency that's maybe not too extended. You can see the yen fell, rallied back up, fell. It's kind of going sideways. This would be, what I would do is take a bet on the pound yen, because the yen's weak and it's not underneath the lower containment bands like the euro is. The dollar is also weak. It had been chopping around all day and it just broke down for a lower low, had one bar up. You could certainly buy the pound dollar or the pound yen, either one. A little bit towards the end of 6. So let's look at the pound dollar first. A little bit towards the end of 6, and you can see this one's already started to kind of work its way up. But if you bought it towards the end of 6, it still went up from 54.80 all the way up to 40. 60 pip move. Most likely I would not have bought because it's already started up, but I would have probably bought this little sideways rectangle breakout here, this little pullback here, and this little pullback here. For a small profit, decent 10-15 pip profit, and about a 20 pip profit here. Let's take a look at the pound yen. I never chase a currency, for other work. This is a much better trade because unlike the pound dollar, it had just been going sideways, and so you can get into it without having to pay up like you did in the previous example. Much better example of how I personally risk my own money. And you can see it went from 152 all the way up to 152, 50, 55. I would have put the stop underneath the swing low, and typically nice strong patterns like this, I'll tend to just visualize where the trend line is and get out right here at the break. So I would have been out at 152, maybe 25. In this trade, at 152. Easy 25 pip win while risking less than 10 pips, because typically once it starts going your way, you move your stop underneath that bar and you're only risking 5 pips at that point. You know, half the time you lose 10 or 12 pips, the other time you lose 4 or 5, 6 pips. It averages out to 5 to 8 pips average loss by this next little pullback here. And again, like I said, a lot of times the two-wave pullback is much higher probability trade. First wave, second wave, and this is a perfect example of when our perfect oscillator probably will help you avoid losing trades. This tool is the only oscillator I've ever used. I've hated every oscillator because they all use a certain number of bars back. This one's all based on statistics. It doesn't use 10 bars back, 14 bars back, 8 bars back. It does not do any of that stuff. And so what it lets you see is a lot of times when the currency is trending up and you get a pullback, if the pullback's underneath the lower Bollinger Band, it's extended, it's likely, you know, to rally back up. You can see the same thing right here. Went up a little bit, not much. This one here is just right at the level. And also the perfect oscillator, when it hits minus 80, it tends to reverse up. Plus 80 tends to reverse down. You can see when it's really near that level, the move is very likely to be over soon, and it only went up another 8 pips at that point. So again, you're really watching this like a hawk. And notice all the times where markets reversed when it hit the extremes. You know, this one here really went sideways for half an hour, didn't really bounce. This one here went sideways, and you know, and once you have a trend, you can see it's kind of double topped here and it's kind of inching its way down. Selling the upper bands when you think it's extended and it's about to retrace allows you to find that trade here. Notice that level here pulled back, the low here pulled up, and again the extremes. That's why I love this perfect oscillator. And it's even better on a currency that's just kind of chopping around. Let's take a look at the pound dollar just so you can see how the perfect oscillator works. Notice again the plus 80 levels. The market stopped on a dime, pulled back, so it can help you maximize your profits, especially at the plus and minus 80 levels, but also at the Bollinger Bands of the perfect oscillator, the end of the move. And again, when you see a strong move up and you get a pullback that's underneath the lower band, you know, pretty decent place to get in. And it really never pulled, it took it a while to start going up. And when you see this and it doesn't move up, it really could go either way. You can just draw a rectangle around it and buy or sell the breakout of it. This usually you're going to get a bounce. Yeah, so there is some selling here, or it would have bounced already. But once it breaks over the high, everybody who shorted this, after seeing the previous move up, they were dead wrong about it falling after that. They all had to rush in and cover, and it just had a nice smooth move. You can use a lot of tools to predict reversals. You can draw trend lines on a currency, then project it off the high. In this case, it's such a big move, you might want to project it off this level. And you can see how it reversed here and here. And when you have confirmation from the perfect oscillator, completely different tool, it definitely helps. So there's so many different ways to trade with our software. I like to showcase different ones in the blogs each day. The more you learn, the more trades you find, and you tend to avoid the ones that most retail traders take that might work, might not work, but typically they work no more than half the time. And you know, most people tend to take bigger losers than they do wins, so that's definitely not good. You want to let your wins, you shoot for 20 to 50 pips on the wins and keep your losses under 10 pips, and you know, then the winning percentage doesn't even matter. You can be right 40% of the time, and you'll, you know, break even on the worst case day and make money most of the time.